around
Sure,
this.
sure, sure.
All right. Good morning, everybody. Sorry we were 2 minutes late. That was my fault. I was oh is my friend the greatest Aston Villa fan in the world? Is he in there today? Kevin, are you there, Kevin? I have seen the mighty Tottenham and we are crushing everybody. Anyway, Kevin, I hope you're doing good. If you're watching this, Kevin's here. Yes. Yeah, a bit of a shaky start for Villa. We'll pass on. You're just shaking off the pre-season. Things will be fine. Yeah, it's always nice to stick it to City. Yeah. Okay. Well, good morning, everybody. It's a good crowd in today. How's everybody feeling about crypto then? I'll be honest, I'm feeling pretty crazy about crypto at the moment. Crazy in the sense of, you know, it's like that emotion can slip in, can't it? A couple of weeks ago,
Mm.
I had the charts open and I was like, look at this, Maurizio, Bitcoin dominance is down and this and that and this and that. Right, here comes the boom. Ah, the fucking boom never came.
Mm.
And yeah, yeah, it's easy to get really like ridiculously easy to get caught up in things. So
Hmm.
a big question to you, Maurizio, that you can just kind of marinate on through the call. You are processing so much technical information in order to uh, decide what trades you're going to take for the 100x. But on top of
Hmm.
that, you're also on Twitter. And Twitter's
Hmm.
fucking emotion, 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 emotion.
Hmm.
And then there's another layer of foundations. How do you cope with all that? Like, other than drugs, how do you not go insane?
Thank you very much for
you know,
disclosing my being a drug addict. Oh, yeah. No, I don't take any drugs. Coffee is my drug, definitely.
well, this is what I mean, man. Like, how do you turn up every day in front of that computer and be like, and just get yourself into that nice level head? Because it can be tricky, man. It can. You can really
Mm.
like. I'm seeing how easy it is to drag these outside. I mean, this is an exciting part of the market, isn't it? If it wasn't
Hmm.
exciting, then I suppose we shouldn't be here. But then I suppose somebody
Mm.
should say, well, you should never get excited at all. And it's like, well, fucking hell, I'm a human being at the end of the day. It's like I can't not feel. But then it's
Well,
recognizing those emotions and still doing the right thing. And
right,
you have
correct.
to do that on a scale that is 100-fold what I have to think
Mm.
about.
So it's one of those things that obviously is not easy. I get a really list of Twitter feed. I don't look at everything. I just take that feed in and just summarize it from that perspective. You know what I mean? So I just follow a few your news and stuff like that. Whatever is important, and that's it. I block everything else. I don't. You know what I mean? Like, because it's so much information out there.
Mm.
On top of that, I start going through on a daily basis and always think both scenarios. Is this gonna go up? Is this gonna go down? And not assuming that always is going to go to the moon. I think that's the biggest thing. If you have that mindset, obviously stuff for the 100x club portfolios, because obviously we are biased only one way. But obviously, because I do scalping as well on the side, that helps me out to balance that. You know what I mean? Like there's short opportunities all over the place, long opportunities all over the place. It's just obviously timing the market correctly, but those opportunities are quite quickly. You know what I mean? So it's a different perspective between the 100x portfolio, which we take it from the long term, and holding things long term is draining, man. It's not easy. You know what I mean? Like, especially we are on positions with leverage and things like that. Uh, Managing leverage, I think, is good as well. You know what I mean? Understanding leverage, understanding how much you could assign into a position, how committed are you with that position? What, you know what I mean? If it's a high risk, low risk, identifying those things allow me to actually just sort of have a little bit of a life. That way, you know what I mean? Because it's tough, man. And the thing about crypto is that things could change in any given moment, right? So we'll go for an example what happened on Friday, right? Friday night, my time. Obviously, I have to disconnect sometimes, otherwise I become crazy. And then over the weekend, things pumped, right? Like ridiculous. And then you get, you know what I mean? And then you sort of start the FOMO, right? And this happens to, I think, to 80% of people, 80% of traders, and so obviously I just need to have a framework in terms of how we're going to catch those moves, if those moves are sustainable. I'm gonna miss a bunch of them. Don't get me wrong; it's hard missing some good trades that I've been tracking for a while, but it is what it is, right? So obviously, but the good thing though is having other portfolios as well, scalping things that actually do small trades here and there, here and there, here and there, and then just because obviously you if you only have one portfolio, you're only waiting for one outcome. You know what I mean? Like
yeah.
you know what I
Yeah.
mean? Like so
Everything else is just on ice.
exactly. And in the meantime, a lot of moves happen back and forward, back and forward, back and forward, back and forward that you can actually capitalize on. That's the tough thing with the 100x portfolio because obviously, but the thing is with scalping, it's fast and you need to be prepared and you need to be know how to size, know how to enter, know how to exit. And and that's my biggest challenge. Getting the two mindsets independently. Because at the end of the day, the market is going to move regardless, right? So yeah, yeah, but have that in mind. You know what I mean? Like the fact that you only have one outcome as an expectation, then if that expectation doesn't come, more than likely you'll be pretty upset or devastated or something like that. So at the end of the day, the market doesn't need to do what you want to do. Period. You know what I mean? Like that's the biggest thing that I've learned. If you are in the right side of the market, that's great. But if you're not, like, don't expect that the market does whatever you want it to do. You know what I mean? That's the biggest stuff with crypto. I'm doing some work on statistics in terms of how many times things have broken out, right? And there is a high, like I haven't finished, but most of the time the market is ranging. It's only a few periods of time that the market actually trends and breaks out, right? But then we expect that every day, markets actually break down. And if we go the other way around and you will say it's going to be a ranging day or a ranging week or a ranging thing, and then we play accordingly. And then when you decide to break, I say, oh, fuck it, whatever, I stay out. And then we go back to the ranging. I think it's going to be more profitable than actually playing the breakouts in a way. I don't know. It's just a thought, it's just a thesis that I'm building.
No, it's a very, very important thought because if we think about original FinRev is a trend following system versus the hyper trend that is an amalgamation of systems because it's completely different. So the FinRev system now, it's ranging. It's not really doing anything for long periods of time. So all those periods of times, it's like, FinRev hasn't done anything for 6 months, 8 months. Well, what has the market done? And what have been your opportunities to trade within that period of time as well? So yeah, it's really super interesting, because then you start to cling on to things like, and I'm saying this on purpose, things like the 4-year cycle. which I did for sure for a long
Hmm.
time. Until that time, Scott turned up and just eviscerated me live on air for mentioning it. You know, but it's true though. You look at, you kind of grab onto these, and I think all of these things distort your thinking, which can knock your confidence. It can knock your motivation. It can, you can end up doing anything but the actual trading.
Hmm.
You can end up doing kind of everything else rather than the actual trade. And so, I mean, paper trading is such it is a vital step, I think, to paper
It
trading,
is
you know?
definitely. It is in a way that you do, like, if you do want to trade, or if you do want to scalp, at least what we call intraday trading
Hmm.
or scalping, paper trading is a must, definitely, because that's going to fine tune whatever system you have in hand, or whatever execution framework you
Mm.
do, right? Your entries, your exits, how do you execute this? How do you exit? That gives you practice. Without that, you will not be able to do it. That's it. As simple as that, right?
Yeah.
Now, there's a lot of tools that can help you out to speed up that process if you are serious about trading. Swing trading is a little bit more difficult, because even though you could paper trade the swing trader,
Hmm.
you more than likely forget what drives the market. And what drives the market is your news, fundamentals, things that happen. And usually we never get those inside those paper trading when we do swing trading.
Hmm.
We always see the moves, but you don't know why the moves happen. You know what I mean? Like, it's easier to
Yeah.
do. It's easier to do the scalping side of things, because market moves, uh, you know, with fundamentals, yes, but then every time, every day's movement, people buying, people selling, people, you know what I mean? Like, it depends of how the market closes. If it closes on a positive, it closes on a negative, he's in a point of reaction. So those things are easy, not easy. It's more reliable to test those kind of trading. But when
Hmm.
you actually start doing the swing trading aspect of paper trading, is more difficult. I'm not saying you cannot do it, but there's some certain amount of things that we tend to forget when we do the paper trading with swing trading, right? Like what was the behavior of ETH at that time? What was the behavior of Bitcoin? What was happening with the inflows? Pretty much the same thing that we do on a daily basis. We never back tested that. You always forget it. You know what I mean? So something
Mm.
that I do is I have a log of every single day what's going on with Bitcoin. That helps me. If I go into back test something in the past, especially swing trading, I go back to my log and say, okay, this is what Bitcoin was doing. This is that. This is my thoughts. Bam, bam, bam. And that's part of your sort of
Mm.
trading methodology, if you want to call it that way. You know what I mean?
Yeah, that's it. But I think with that, let's call it as assessment of the market, that kind of daily assessment of the market. Maybe in another 100x club, people can let us know in the chat if they're interested in this. It's like you can feel overwhelmed before you even start with something like that, but you could also feel underwhelmed. So you could be saying, well, I'm only going to look at Bitcoin. Well, is that enough? And then if we were to open your trading view, Maurizio, you I expect, because I've seen most of it, you've got everything. You've got the FTSE, you've got the dollar, you've got gold, you've got it, and it's like, whoa, that's a lot of charts. And it's like, are we saying that, and this is what I mean by the overwhelm, are you saying that we need to understand the relationships between gold and the FTSE and everything like that, and then consider things like the impact of this 39% tax, American tax on Swiss gold that enters the country? So this like sort of tax on, I don't know how, see, I don't even really know how gold is taxed, or if it is taxed, blah, yada, 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 outside of taking it to the shop in Thailand. So you see what I mean? It's like it's easy for the
Yeah.
mind to jump straight into that. Well, fuck, where do you even? Because there's so much information. So I
All
suppose
right. This
knowing
is the
the main market cycles and the main drivers of the market, which is easy to say, That's the bit to get under, isn't it?
Correct. But this is depends on what type of trading you want to do. I will say that you do have to do that kind of analysis or understanding if you wanna do play the long-term game. And that's the play that we're playing at the 100 Days Club, the long-term game. But if you play the short-term game, honestly, you don't need to know all that sort of stuff. Why? Because the only thing that you need to understand is how to read the charts properly. You know what I mean?
Mhm.
Like what's the and not think that, and this is kind of what is tough in having two different methodologies. Every time
Mm.
that you take a scalp, and has happened to me, you know, let's say I take a scalp, and because I'm biased towards a longer term, I just leave it, and it's as a scalp. I shouldn't be leaving trades that they're not signed to, you know what I mean. So that's kind of the depends of how you trade is depends on what you need to know. That would be my take. You know what I mean? So defining how you want to trade is an important aspect of fine tuning or just limiting on the stuff that you need to know.
Mhm.
Otherwise, you know what I mean? You're looking at the tax thing. It completely is irrelevant if you're going to scalp today's market. That's it. You know what I mean? Like
Mhm.
irrelevant.
Mhm.
But if you hold INA, and let's say you hold INA, you're gonna hold it for 1 year, 2 years, then it becomes relevant. Then market could shift, you know, things could shift, regulations could shift, a lot of things could shift. So that's kind of
Yeah.
something to keep an eye on. You know what I mean? So obviously that will be
Because
the first question. How do you want to trade?
that is, well, that's the central question, and
Mm,
that is locked in there. Stemming off of that question, um, if we look at, say, long-term swing trading, well, that price action wise, that can teach you about, well, price action, but I mean like the direction of the market. So let's take, for example, that you look at the weekly candle close. So let's say that
mm-hmm,
you want the weekly candle close above a certain line of resistance. Well, the
mm-hmm.
following week, I suppose it's 50-50. I was going to say the following week, most probably, most likely, you're going to get a retest. So then that gives you some idea of like the market movement. If you've looked at, say, the monthly and the weekly, and then you do something on the lower time frame. But then I think you've invented your own kind of trading system then, because then you got to ask yourself the question, well, are you trading breakouts? Are you trading retests? What specific have you got a set of rules that you're going to follow by? Again, you can quickly get into another rabbit hole of, well, I thought this was a good idea. I've put a whole load of effort into it, but maybe it isn't. And maybe I need to switch now. And I'm in this massive study mode and not quite sure how to make that switch. These are things that I
and,
feel.
and uh, mate, and everybody, I think I'm still working it out. Like obviously, the different thing is I do this full time, so this is my job, right? But that's the main difference. But you mentioned something very interesting that I want to highlight, and this is when I made mistakes, and a lot of people make mistakes. If you're looking at the monthly and the weekly, and that's the only thing that you should do, you shouldn't be fucking looking at the market any other day except on a freaking Monday. Period. That's it. That's the main problem that we have. You know what I mean? I look at the weekly as a guideline because I'm doing intraday. Kind of, I want to do scalps and I want to get positioned properly with leverage to get that swing move. That's the only reason why I'm looking at the daily or even 6 hours or even lower than that, right? But if you are a swing trader, I think weekly should be your uh focus. That's it. Or weekly and probably 3 days. So you have a look at the read at market and weekly, and then every 3 days. Every 3 days is very telling. I'll tell you why. So every 3 days you come back, have a look at how market is doing, and then that's it. You make the decision. You have to have wide stop losses if you do that sort of stuff, right? But then it's a long-term play game. The main problem, is that we look at the monthly, we look at the weekly, and then we expect that if we have a breakout on a monthly or on a weekly, next day things are going to go nuts, and that usually doesn't happen that way. You have a lot of choppiness and things like that. So having the expectations of the time frame that you're trading is very important. You know what I mean? And I've been, by being guilty of not following, especially me, that I'm doing different sort of time frames. But if you sort of marry with only one time frame and become good at it, then that's kind of one of the biggest things.
Yeah, this is some interesting stuff, because like I found it almost easier when I was kind of first starting out, completely clueless, looking at the monthly and the weekly. Like there was less noise, and then you keep hearing people say the same thing, like, oh, it's stronger moves when it's on the bigger time frame. So I think that's a natural place for people to to start and look. And it does give you, I mean, I use it most weeks when I do a quick thing. It gives us that great big picture. And most of the swing trades I took, they took between sort of 4 and 6 weeks. So, it was an easy life in one way, because you're not putting that many trades on. But yeah. So sorry, get into this, more of the intraday. If you know what I mean, there might be some odd CSI members on here. Like that's a perfect example of, a system that had a set of rules and the time frame, and you just turn up and you executed on it, and and it was done and dusted, because well, I want to pause there a bit, if you know what I mean. I was going to get into too much minutiae about coin selection and stuff.
Oh man, it is.
It's been a good 30 minutes chat. I'm hoping that resonated with everybody, what we were chatting about this morning. We can have more kind of chats like that. It's great to see some of the comments that that were coming in.
I think it's
already a bunch of members that are scalping and doing okay.
Man, I think correct. And don't get me wrong, every single methodology is not for everybody. So you need to find yours, right? In terms of the amount of money you have as well. Because think about it from the perspective, if you're looking at the monthly and you only have $1,000, I don't know how much you're going to get that $1,000 to triplicate over time. You know what I'm saying? Like that's kind of, it's a bunch of different factors that will include your trading strategy in a way, right? So obviously that's something very, very important to highlight. Time that you have in your hands, time that you have to earn, money that you have in the bank, so many different factors. But then when you sort of start fine tuning it, more than likely you're gonna end up with your own system, a system that works, right? Part of the 100x Club, obviously, we just sort of position well, and then we start sort of, especially with the derivative accounts, with the leverage that we're doing. Like we've been doing it pretty well. Like for the past year, we sort of did. We so far we're on 12x our account, right? It's a pretty good reasonable. It's a pretty good reasonable. Like on the spot portfolio, we're just holding until, because we only have one direction on the spot portfolio, and it's either to buy or sell, and we cannot actually go either way, right? So, but the derivative side of thing gets draining sometimes. You know what I mean? You have to hold, you have to be aware, you have to know how to size, things like that. So obviously, if you're willing to play the game, more than likely you're gonna do well. But if you don't, then spot at some point will gonna pay out. How, when, who knows? But it will. You know what I mean? Like it will, I'm pretty sure. So yeah, so many aspects, man. But then yeah.
Nice. Very nice. All right, should we have a look at that filthy Bitcoin?
So on that note, do you guys, how do you guys feel about crypto now? Like, do you guys feel bullish, bearish? Because it's been crazy, man. And I've been saying for the past week that it's been going to get choppy. But I just want to hear your thoughts in terms of, everybody. What do you guys think? So you guys are bullish, bullish. Yeah, bullish long term, bullish. Yeah, the fluctuations are good. Choppy is good if you actually do scalping, right? That's actually good. So everybody's still pretty bullish on that regard. All right, so that's a good thing. Let's go through. I've been doing some research this morning into interesting things that obviously, because that's another thing, trying to find out what are the things that are moving the market, right? So let me just share my screen now, and let's go through the main things that I'm seeing. All right, let's start with Bitcoin, right? Let's start with Bitcoin first. So Bitcoin. This is the week. Is this daily? Yeah, this is Friday. So yeah, Friday, what happened? We were sort of waiting, right, to the Jackson Hole meeting to see what was going on. Apparently, Powell actually came out with expectations that there is a high likelihood that is going to be a rate cut rates, right, on September. Now, technically the market priced it in immediately. Like you could see that everything just went ballistic, right? Which is good for us, right? For the positions that we hold. Okay, so this is the candle in 6 hours on, yeah, that actually happened over New Year session more than likely, but this is the over weekend. This is the actually weekend price action. Okay, so here's where I'm at. Obviously, we are still on a range. Okay, we're still in the same range that we've been doing. Now, if we talk about ranges, we know that this could be the bottom of the range, right? Because this is the bottom that it marked on the 3rd of August, right? And this is kind of what we've seen that people are willing to buy, right? We can actually see that just this morning, have a look, 30 minutes, we had this huge candle, right? Huge candle down, right? And then actually recovered quite a bit. However, I don't like this price action because this price action, it seems like a big sell-off, right? If we go to, let's have a look at the Belo data. All right. So if we go on Velo data, we have a little bit of a view of what we seen here. Obviously, I do like to see the 30 minutes 30 minutes gives me like a medium term towards longer term. But this is something, Ian, that if you want to scalp or want to do at least intraday stuff, I think this is a very significant indicator, and I always, every single day, I look into it, and essentially is the community aggregated spot volume community delta. What that means is, I'm gonna explain it again, right? It measures the amount of volume going through the spot market. We know something, and we know that derivatives. Always think about it from the perspective that who is driving the market at this particular time, right? If we have a huge move, who is the driver? Is it spot or is it derivatives? What is the difference? Spot is, people like institutional money that buy spot and holds, or the ETF inflows, or huge whales that actually just want to hold and buy, or people doing DCA. That amount of money is the one that actually holds the market on a certain level. Okay, in my view, could be, what I mean. Sometimes it's the inverse, but that doesn't happen quite often. And then you have the leverage traders. The leverage traders are the ones that actually go on leverage. They go the 100x, 20x, 25x, people like you, me, you know, people that want to capitalize on the move, right? Now, scalpers as well, you know, scalpers, you know, can take this trade and then get out and then that's it, you know, make really good amount of money. So that's kind of what we're seeing on the aggregated open interest. But the open interest is basically the amount of contracts being open. We don't know if they're open longs or we don't know if they're open shorts. So what I want to highlight is on Friday, you know, we did a little bit of, I did explain this, you can go and watch the video on Friday. And what I was seeing is that on Friday, we had this buying of spot, right? But the market was going down, right? But the open interest going up. What does this tell you? Okay, so again, going back to what I'm saying in terms of open interest, the definition of open interest is the amount of contracts being opened. You don't know what is, if it's longs or you don't know what is, if it is shorts. However, you might know the first indication that it's a long or it's a short is the market movement. Okay, so if you start seeing that the market moves down and the open interest start rising, what that means is a lot of shorts are being opened. Especially, you know, and we went through this on the course, on the leverage course, especially after we have liquidations. Think about it from the perspective that every time that we have liquidations, it's like a reset. It's like a leverage reset, right?
Mm-hmm.
So we just had liquidations here, and now we start seeing that the market is going down, and we have market open interest going up. There is a highly likelihood that a lot of shorts are being opened at this level. However, the good thing that I noticed is that spots were buying and holding that level. So I was talking about a possibility of something that's called a short squeeze. Short squeeze is when a lot of shorts get squeezed off their positions, and then you have this huge movement to the upside. And lo and behold, obviously, that happened because of Powell, but you know, a lot of buyers comes here, and now boom, you got this trade. Honestly, if I wouldn't be around trading this, I wouldn't be definitely trading this, right? I trade this sort of upside, right? And you can actually see all the liquidations here, right? So, so that's the game that we're playing on smaller time frames. But this will give you the direction on longer, like to open a swing trade or to have a look at the directions of the market in several weeks. So with that being said, okay, there's a few things that I'm watching today. So first of all, a lot of the spot buyers, guess what? They're selling, right? So a lot of the volume that came in from Friday, they start selling already, right? Is that the same buyers, the same sellers? Who knows? But now we start seeing a lot, like market going down, open interest going up, right? So we're going to see, we're seeing a lot of shorts piling up as well here, right? Now we do have liquidations here, okay? We have liquidations here. So this is what I'm thinking at the moment, that we might start driving the market a little bit down. Why? Because I'm not seeing a lot of support of buyers at this level here. So with that being said, more than likely we could have a little bit of a run to the downside here. Okay. Now the interesting thing is this level going to hold? Is this level going to be attractive enough for spots for spot buyers to come around and buy? Right. So that's kind of what I'm tracking right now, because the price action looks pretty jerky, like looks pretty. I don't like it. It's not a really clean price action, as you can see. You know, it's not a trending, or it's very choppy. What do you guys think about this price action right now on the 30-minute side of things? You like it? You love it? Sometimes you don't even see anything. Tell me your take.
That giant downside wick feels like a bit of a flush out.
Correct. But then that flash out, right, is you can actually see the liquidation there. It's a huge liquidation. I'm talking about 1.4 million, something like that. So it's a huge, this is the biggest liquidation on the downside since, I can go see in the 4 hour. Huge liquidation since June 13. This is the biggest liquidation to the downside since June 13. So, and this is liquidation to the downside. What that means is, you know, a lot of people that went long on Powell's news or whatever, right, probably got already liquidated. And then on top of that, we don't see any spot coming in to sort of defend this level here. So that's kind of what I'm start every morning, trying to read this to see what you, because at the end of the day, if you have a really good read of what Bitcoin is going to do throughout the day or throughout the week, then you might have a, you know, that's your decision to actually start buying things with leverage, and then you will go into the strongest coins and things like that. But before that, this is kind of my main look, right? So that's kind of Bitcoin out of the way. However, there is, you know, a few things that I don't like short term in terms of market wise. Let me just go back and let's have a look daily. Sorry, 6 hours here. At least for this week. So I'm still bullish, very bullish on a long-term perspective, but this is the first that we had several attempts to break this level here. Now, there is something very peculiar on price action, and this is actually something that you guys like, or that I use pretty much every single time. And then, you know, we know how to draw the levels and the levels of liquidity or the levels of support, resistance, whatever you want to call it, right? But every time that we retest those levels, right, usually that's not a good sign. Why? Think about it from the perspective here that this level was hit here on, like, we broke the 112 level. If we are in a bullish, in a very, very bullish environment, more than likely people will will front run that level. They will not let the price get to that level because, you know, that, you know, the frenzy of buying is there. So I want to buy before it actually hits the 112. You know what I mean? Like that's kind of my first sort of, you know, measurement, especially on a daily, right? That we are going to have continuation and we keep getting this sort of retest to lower levels. So what that tells me is we might have a little bit of a weak leg this week, maybe, especially there's a few things also to keep in mind. And if we have a look at the weekly, let's have a look at the weekly. Because for those ones that they like to do a scalp, there's a few things that I do as well. At the end of the month, there's always retracements. And, and I did talk about it several times before. And I don't like to start getting in any positions on the end of the month, like especially to hold. Why? Because if you go by history here, there's like, even if you have a bullish month, there's always a retracement at the beginning of the month. So at the end of the month or the beginning of the month, that's actually quite, you can actually replicate it, even though in a very bullish month, you do have a little bit of a retracement, a little bit of a retracement, a little bit of a retracement. So what I like to do in terms of positioning, I would like to see how the end of the month looks like, right? So if we have a look at the monthly candle, it looks like definitely a retrace, right? Is this going to end up as a doji candle? So the retrace already started happening. Why? Because a lot of the institutions start selling prior to the Jackson Hole event. Now the Jackson Hole event is over with positive sort of forecast, right? Of people, you know, of positive forecast of a possibility of cut rates in United States. And that's going to be very, very good for markets, especially for risk markets, because that's a lot of the money printing and a lot of liquidity coming in and all that sort of stuff. So now that's going to be the next catalyst for this thing to move. Until then, right? Is that going to is that going to be priced in? Are people going to buy prior to the news or things like that? So that's kind of what I'm heading. So we are 5 days, roughly 5 days, 6 days before the end of the month, right? So I'm going to be very cautious in terms of positioning again, because we could get a lot of choppiness around here. So that's kind of where I'm at the moment in terms of Bitcoin. If we have looked at that was the monthly. If we have looked at weekly, right? Weekly. Okay. What do you guys think about this weekly? Oh, this is very telling. What do you guys? Yeah, give me your thoughts. Like if you look at this from the weekly perspective, right?
Well, looking at that, looking at today's candle, we closed above that line of resistance, didn't we? I think just
So
marginally, or because
yes,
if we close below that, then we'd be in a completely different world because we'd be looking for because to go to the downside, a sequence of events have to happen. You know, we have to have a candle close below that line of resistance and then a relief rally to turn that old support into resistance so that we can then continue going on down. I suppose that's technically by the book what we want to see. So the fact that we've closed above it means that the probability of us going to the downside now is much less, considerably
okay.
less than what it was previously. But it
Okay.
doesn't mean we're going to the upside. But
Exactly. And
yeah.
this is a tough thing about the weeklies and monthlies. You know what I mean? And you have to deal with volatility. Okay. The downside here, I want to highlight something, and definitely there's a concept in market that is called market structure. Okay. And market structure means that a structure on bullish, bearish has shifted from bulls to bears, bears to bulls, whatever. This is the first indication that the structure has changed to the downside on a weekly. Why? Because even though we close above these levels here, which is our previous highs, right? This is the first time that we actually close below these levels that they were holding the structure, right?
Mm-hmm.
Now, this is kind of something that if I want to go bullish, definitely I want to make sure that Bitcoin closes above that level there, 114, right? Because now that's kind of the structure. Even though we have a weak up here, right? That doesn't tell me anything. But the only thing that I'm seeing so far is that now, where is the next point of structure break is below these levels here. So below the 110, give or take. So definitely we want to monitor what's the reaction of price. What is the reaction around these levels here? What I mean reaction is definitely on the daily, at least, I want to see the market hold these levels here. Okay, if the market doesn't hold these levels here, what I will suspect is that we might retrace a little bit further, right? How far? Well, my next level will be around the 108, at least to this 200 EMA. You know, that's a very challenge for institutional buying. So obviously this is kind of playing the mean reversion game, kind of. So, or what happens usually is if we hold these levels here, what the EMA is going to keep doing is it's going to get resetting. So this is actually, if we are in a range, and that will be another possibility, that EMA keeps going up, right? And now that becomes a really good point of confluence to actually get us all the way up to whatever number. Okay, this is, you know, if you start thinking ahead, especially on AMAs or levels, the longer we range here, then the EMA sort of resets, and then people will notice that as a strength. You know what I mean? That's kind of something that I'm playing. Okay.
Mm-hmm.
So something that I want to highlight is now the reason why I've been tracking Alcam, and the reason why we have a sell-off in Bitcoin is because there is a huge whale selling Bitcoin and buying ETH. Okay.
Ah.
So that's interesting on that regard. However, let me show you ETH. Okay. So ETH, right, is now like we have all eyes on ETH. Okay. ETH is going to be our trigger for off season, more than likely, always has been. Now we're back in business very close. Like on the weekly, we actually touched the all-time highs, right? Like if we have a look at daily, yesterday for let me go back to an hour. Yeah, for 1 hour, we stay on breakout mode, kind of on price discovery. That didn't held up, right? So the reason why we had this massive influx is there is a whale transitioning from Bitcoin to ETH. And obviously that's going to be, if we have a look at ETH against Bitcoin on the daily, that actually is going to reflect, obviously, which is the ETH against Bitcoin chart, right? So that's actually something that is very telling. Now, the only downside, because obviously I have to look for good triggers and bad triggers. So in terms of bull triggers for ETH, that's very positive. Even though we have a sell-off on Bitcoin, I think he's positioning well on ETH. Okay, so that's actually something that if we now look at ETH here, we should see the CBD volume coming out, right? Now, look at this. See the difference, right? Now, this, man, for me, is actually one of the biggest indicators. It's simple, right? But we have to just wait until we see a structure. You can actually see it. You can definitely see that the CBD volume is going up and up and up and up and up and up and up, right? Why? It could be institutions, could be that, but then more than likely, yeah, I have this post here of this morning. I can share this post in the chat. So you can actually go and track everything that's happening. So this whale is actually selling on Bitcoin and transferring everything on Hyperliquid. So hear me out what's happening here. Okay, so this guy is transferring everything. This is about, I don't know, 17 billion or something like that, he's actually shifting. Now, that's going to be very good for Hype as well. Okay, so obviously that now I'm building my thesis that, I'm still keeping my Hype, or maybe I'm going to increase because there's going to be a lot of influx. So all these things happening underneath, right? Now, on top of that, yeah, I was sort of, you can actually I was building a entity. So if you track all those addresses and put it here, you can actually do a really nice dashboard. I didn't have time to get that done, but then I just want to see how much of is going to be the impact of ETH buyers. Why? Because I want to get position, right? And that's kind of, I want to get position, or I want to wait to get positioned. Now, that's kind of the thesis that I'm building. The problem that I'm seeing now, there's two things, and this is something that I want to highlight strongly. There is this side, and I'm going to put it here. I usually don't pay much attention, but somebody in Twitter highlighted this, and I say, shit, I haven't looked at this for ages. Let me tell you what this is, okay? So this is the Ethereum validator queue. So essentially, a lot of institutions or people, you could stake ETH, right? So if you bought ETH for a while and then you staked it, then you get yields and you get a lot of different things in terms of, depends on the platforms. If you do it through Pendle or you do it through Ina, whatever, you could definitely stake ETH. Now, in order to unstake ETH, you have different mechanisms to unstake ETH. You can either sell it and pay a big fee, like a 1% fee through market making and stuff like that, and do it immediately. Or you could actually, hit the unstake button. I don't know if you guys staked Hype, but this is a very sort of similar mechanism in where you stake, let's say you stake Hype, right, on the Hyperliquid, and then to sell it, you need to unstake it. That unstaking takes time, takes about 2 weeks to do, right? So this is kind of the measure of how many how many people are on staking ETH, and what is the wait? So what's the delay? So why I'm tracking this and why this is important, okay? Because if you have a look on the last 7 days, so let's go 30 days, no, 90 days to make it more pretty. This is the queue, okay? This is the queue. What that means is people are unstaking their ETH at those levels, okay? What is that telling you? That telling you that it's a high likelihood that if you unstake an ETH, it could be. What do you guys think? Why would you unstake ETH?
Why would we want to stake ETH?
Like if you thank you, Jeff. Yes. Or why do you want to unstake hype, for instance? If you so sure the hype is going to go to $1,000, I don't know, I'm just kidding. You know, why would you want to unstake it? The first thing is to sell it, right? I agree. Jason, I saw 100 ETH stake on others into from now they make a 1 million profit. Exactly. Exactly. Yes, Todd. This is I usually when I was trading out, this is a really good measure for longer term sort of stability for ETH, right? I'm glad that someone pointed out in Twitter, and because I didn't have, yeah, I wasn't paying close attention to this, which now we should, by the way. Now, so now we've seen that, and by the way, this doesn't mean that ETH is going to go to zero or is going to go to, but it's selling pressure. Okay, this is something that we need to be aware of and not get really crazy on leverage right now. I wouldn't, because now I kind of see that it might be a little bit of selling pressure. Okay, so that's something to make me think, we are in a good levels to take some profits and things like that. I was going to take some profits prior the event, but then I didn't. But then now I'm seeing this. Let's see how the market plays out. But this is my thesis now. All right. So now I'm seeing this. Now, the interesting thing is if we see a lot of unstakes happening. So if that's going to happen, that's going to make the market very volatile. Would you agree? Like you're going to get a lot of sellers, you're going to get a lot of buyers. So this is not the time to start doing leverage stuff. I will say this might be the time to actually get some spot stuff, right? If we get some good retracements. Okay, that's kind of something that I can, or if we start seeing this, we could play some scalps, and definitely I will not play the long scalps. I will play the short scalps, right? Because I'll be shorting in some ETH, but I don't know how many of you are keen to actually me doing some scalping, unless you already understand how to leverage. And it's not a game that I want to play with you guys. But if you do know how to do it, probably it's not a bad idea, right? Like it's not a bad idea in terms of probability, at least medium term, like short term, okay? So that's kind of what I'm seeing at the moment, right? But then something that we need to take into account is that if we start seeing a lot of sellers here, but if holds its level, that's the most bullish signal that you're ever going to get, okay? Think about it from the perspective. You get a lot of selling pressure, right? And then let's say ETH, where are you? Right here, ETH. You get a lot of selling pressure, and this is not today, this is not tomorrow. It might happen a bunch of things today or tomorrow, but then this could be over 2 weeks. Remember that this validator thing, it takes 2 weeks, right? 14 days, 17 hours to actually exit the queue, right? So, and then that doesn't mean that on an exit, right, it's going to actually they're going to sell, right? So have that in mind. But this is a very interesting thing. The thing with Mike is what I'm saying is people that follow staking, usually they take into account how much staking is in the market, things like that, in order to stake and then get there out, sell some, probably transitioning to alt, so things like that. But then we have to take into account how the market will react to this sort of stuff. So coming back to that is if we see, give me 1 second, then my dog went nuts. Give me 1 second. Yeah. Sorry about that. So if we start seeing a lot of sell-offs, right, on spot, but the market actually holds these levels, right, then is when I want to go a little bit more on leverage on ETH betas or even ETH. That's kind of thesis that I'm building at least for the next 2 weeks. Will I do it now? Will be tough because obviously we're approaching too close to the month, right? And also I don't like to get position at the end of the month. More probably I might just take some profits and play it that way. The downside of taking some profits is that, let's talk about with the positions that we have in terms of leverage. Let's talk about INA, for instance, INA that we are in 2 different good positions. So I think INA could be this has been the greatest, one of the greatest trades that we've done as well, the INA. But then we are on a verge of a sell-off. How big of a sell-off this is going to be, right? The problem with taking profits is usually our mindset changes, right? So let's say we hold INA. This is the second trade, by the way, with a higher leverage. If we hold it, then we're holding. But then when we actually take profits, I don't know your mindset, but my mindset actually goes from risk-free, and then I tend not to add more unless I see something very, very, very juicy. You know what I mean? So that's kind of the mindset, which I don't know is good or bad, but then this is the downside for me taking profits at this stage. But that doesn't mean that you couldn't do that now, and we can add. Let's say we take some profits here, at least 50% of this trade, move the stop loss, and whatever happens. And if we have a retracement, and if we do have another opportunity to actually position, then we'll just re-enter another one. This one, I'll just leave it definitely. We already took some profit on this one. You could take some profit more on that one, but then we already sort of like, taking, this is the one that is being very, very profitable. So things like that we can do. Probably in the next call, what we can do is talk about adding more, how to do leverage and things like that, if you want to go about that. But this is what I'm seeing right now in terms of the market. So yeah, I'm just conscious of time. So I want to go through the important ones. So I think definitely just keep an eye on this validator thing. Keep an eye on how the reaction of Ethereum specifically will be on these levels. What levels I'm looking at? Let's have a look at Ethereum. Ethereum. Another thing that people almost forget, right? And that's important before we actually close it, because we have talked about the gap, the CME gap on Bitcoin, CME gap on Bitcoin that usually gets filled, and then, but we sort of never talk about this the CME gap on ETH. Okay, there is a CME futures market on ETH, so we do have a gap here that it was completely filled, right? So let's keep an eye on the gap tomorrow. Let's see. More than likely, I think could be a gap, right? And looking at the reaction of futures on CME, that's going to give us as well another opportunity to see if the market actually will hold on Ethereum on the sell-off. That's basically what we're looking for. And if it does, then we're going to have a bullish signal, because if you have sell-off, market holds, and Ethereum holds, man, we're in business. That's kind of my thesis.
Is that boom time?
So yeah, that's it for me, guys. So obviously, I'll keep tracking this unless this, I think I don't know if we'll have time for one question or something, and then we'll call it a day.
That's amazing stuff today, Maurizio, as ever. No, I think that's really great. Yeah, that worked well today. That worked well.
Okay.
All right, nice. Well, see everybody in the group. Look forward to the updates, Maurizio, and
All right, guys.
everybody
Have a
next
good
week.
one.
Cheerio.
Bye bye.